Nilu was saying, can we use inventory adjustment break to take long positions, and how will we differentiate between IB and failed breakout? That's what I just tried to explain here today. It depends on how the market is reacting. Let's say this is the range, and you are breaking out from it. Now that's what I said. Like there is a small balance here. All right. Let us quickly confirm that on the shorter time frame chart. Yes. So this is that balance I'm talking about, and this is that HVN I'm talking about. So that's the small HVN there is. So what can happen? Let's say if this is a failed breakout. So what we are expecting to see, come back inside the range, come back and trade inside the range. This is what we are expecting. Now, if it is a just a inventory adjustment break, then what we are expecting? We are expecting a shortfall, and it should go back up. From where can it go back up? A few places. Let's say it develops like a even more. This is not a P, by the way, because this is too small. But there are single prints here. Okay, so you can say that this is one distribution, small distribution, third distribution, multi distribution day, kind of a profile. So what can happen if we come back inside these single prints and reject? Good. If it tests this gap and reject, good. It comes lower, tests this HVN and reject, still good. So in these three scenarios, let's say just single prints, gap, and this HVN, then we are saying that okay, this uptrend is still valid. Why? Because we are developing value area 1, then higher value area, then higher value area. So 1 2 3 we are developing higher value area, stair step method, we are going up. Good. If it comes back down, now let's say just forget about everything and just look at these three distributions. Then what is the last point of demand here? It is this one, because that is the last area from where we broke out to the upside. So this is the last point of demand for us. If it comes to that and get supported, great. These are the single prints, rejection zones. If we come into that and get rejected, great. Or if we get a small inventory adjustment break and again recover back, that is also great. So as long as this second value area, or in this particular case this value area is intact, it is still a test, and the uptrend might resume. The moment we go below that, then everything breaks down, and now this becomes a failed breakdown, a failed breakout more likely, and we are likely to come inside the range. We're likely to test these HVNs center of the range, and probably explore the other end of the range too. So that is how this is going to develop, and that is how you can differentiate. And like taking a long position, well, again same thing. So let's say we have a P shape. This is how the VWAP is. Now you get an inventory adjustment break and the VWAP starts to fall down, and now if we recover, go back above VWAP, you can take a long trade here, or you can take a long trade based on some price action pattern or whatever. Here also put your stop losses here. So from where it reverses, will give us an idea of where we can take a long position from. One time framing, if let's say this is the P shape and we are coming back down, and here the one time framing breaks and you get another extension to the upside, you can use this pattern also to get into long trades. So there are multiple ways you can use shorter term market developments to position yourself for higher time frame trade.